what standards on auditing are all about. And we have also understood limitations of auditing process. Similarly, in chapter 2, we have learned about audit planning. And in chapter 3, we have learned about internal control, audit risk assessment procedures. We have
We have
also
also
learned
learned
about
about
materiality
materiality
and how an auditor prepares uh, his procedures in accordance with SA 330. So today we shall be starting a new chapter, chapter number 4, which relates to audit evidence. So first of all, guys, we shall have a quick recap so that you also get charged up. So tell me quickly, guys, on the mail, what is objective of audit of financial statements? What is objective of an independent auditor of financial statements? Yes. So quickly, guys, we'll quickly refreshen up your knowledge of chapter 1, 2, and 3 so that we can start this chapter 4. Yes. Yes, guys, please send your replies on mail. Please send your replies on mail on BOS portal. Quickly, in few words, what is objective of an independent auditor of financial statements? Yes. Yes, Dipali, to obtain reasonable assurance. Yes. Anybody else? Reasonable assurance about what? Guys, come on quickly. Yes. Tejaswin, yes, to obtain reasonable assurance on financial statements that these are free from material misstatements and express an opinion. So never forget this important point, guys. Ultimately, the objective of an auditor of financial statements is to express an opinion on financial statements. Okay. So whose responsibility is it to prepare financial statements? Yes. So guys, I am getting all answers from all students. So it is not possible for me to take every name. So all of you are writing correctly. Yes. Yes, management, company. Yes, it is a responsibility of management. So my request to you guys is never lose sight of these two important points, because in examinations conditions, the paper setter intertwines many things to test your knowledge about these fundamental two things. So always remember these two things, that responsibility of preparation of financial statements lies with management of an entity. Okay. And the objective of an auditor of financial statements is to express an opinion on financial statements. Ultimately, it boils down to expressing an opinion. Ultimately, what is the outcome of an audit process? The auditor would be ultimately giving an audit report. What is contained in this audit report? His opinion. So therefore, we say Now you are able to hear me, guys? Yes, Nisarg, the voice is not, the students are saying that voice is not, they are not able to hear. Why they are writing? Yes, guys, are you able to hear me now? Okay, now, yes, Depali, okay. So guys, you can raise your queries on Zoom later on in last half an hour. Okay. Now you can send your thoughts, your queries on BOS mail. Okay. So I was telling you guys, never lose sight of these two important points. Again, I am repeating that management is responsible for preparation of financial statements, and the objective of an auditor of financial statements is to express an opinion on financial statements. Okay. And so, guys, tell me another thing. What do standards on auditing deal with? You have read this in chapter 1. Primarily, what do standards on auditing deal with? You have read about SA 200, 315, 330, 320. You have read these? Anoop, please raise your queries on Zoom in last half an hour. Yes. Yes, guys. Tell me, you have read chapter 1. What do standards on auditing deal with? Yes, Tejaswin, yes, you are right. To ensure consistent audit quality and to make sure audit is in par with global standards. That's right. But what do basically they deal with? That's also right what you are saying. This is one of the purpose of standards on auditing. So if I were to ask, do standards on auditing deal with the rights of auditor or responsibilities of auditor? What would be your answer? Tell me. You have to be very clear about these small things, guys. Tell me. Do standards on auditing deal with rights of auditors or responsibilities of auditors? Yes, yes. Responsibilities of auditors. Yes, Tejaswin, Amar Yadav, Pallavi, all of you are stating correctly. So they basically deal with responsibilities of auditor. So again, never lose sight of this important point. So guys, this I am telling you is sort of some sort of bullet points which would be helpful to you in answering MCQs, in solving case studies, and in writing your answers also. And you will not write anything wrong in the exams then. Okay. And tell me, what do we mean by audit risk? Tell me, what do we mean by audit risk? No, no, Arup, this chat section at Zoom would remain disabled. If you want to raise query, again, I am telling you, if you want to raise query, then you can raise it at the BOS portal. or if you want to ask, then you can ask in last half an hour. Chat section would remain disabled at Zoom. Yes. What do you mean by audit risk? Yes, what do you mean by audit risk? Bhavna, you are saying any misstatements in audit report. That is not a proper way to answer, Bhavna. Although your intention appears to be correct, but that's not the way to write. Yes, so many of you are writing correctly. So audit risk is so remember one thing, guys. What was the objective of auditor? Objective of auditor is to express an opinion on financial statements. So what is audit risk? Audit risk is a risk that the auditor expresses inappropriate opinion when financial statements are materially misstated. So it is the probability, it is the chance that the auditor gives inappropriate opinion due to misstatements in the financial statements. Like, suppose there are misstatements in financial statements, and auditor fails to detect those material misstatements, and he gives a clean report. He gives an unmodified opinion, whereas he should have given a modified opinion. So this is known as audit risk. So tell me one more thing, guys. Uh, whether audit risk is present in every assignment, in every engagement. Yes. Whether audit risk is present in every assignment, in every engagement. Yes, Pallavi is writing yes. Bhavna is writing no. Tambeshwari is writing no. Aisha, Banu, you are also writing no. Hasi Agarwal is writing yes. So how, guys, how those of you who are writing no, how you are saying so? Guys, always keep this in mind that audit risk is present in every engagement. It cannot be reduced to zero. It is always there. Now, look, many of you are writing that there are three components of audit risk: inherent risk, control risk, and detection risk. So can we eliminate any risk completely? The answer is no. So this you have read in chapter 3 and somewhere also in chapter 1, that audit risk can't be eliminated completely. We are talking about risk. Like while going on a road, can you say that that safety risk is totally eliminated because road is of very good quality and there are signboards and traffic is less, but still there is a possibility something untoward can happen. Similarly, audit risk is present in every engagement. Never lose sight of this fact. Important from examination point of view. It is present in every engagement. So guys, so we did a quick recap to refreshen you up. So guys, this is again Abhimanyu. Please do not raise your hands now on Zoom. You can raise your hands in last half an hour when you will be unmuted. Okay. So for the time being, you can send your queries on BOS mail. I have repeated it twice or thrice, and I am again repeating it. Okay. So yes, guys. So was this a breeze of uh, recap helpful to you? Yes, tell me, guys. And guys, always remember that while preparing for exams, and more particularly for professional exams like CA, there are 3-4 steps. So you have to follow those steps. So you would be saying that sir is talking all nonsense. He is not starting. He has not started chapter 4. So, but this nonsense is also very important. Okay. This nonsense is going to help you in your exams. Yes, Aditi Kukreja, you can raise your hand in last half an hour when you would be unmuted. So for the time being, you can send your query on BOS mail. Okay. So first thing, guys, I was telling you, first thing while preparing for exams is to understand the concept building. So like you are listening to this lecture, or you have heard the previous lectures, so you have assimilated something, you have understood some concepts, you have got an idea of what an audit is all about, what is audit risk. So these kind of things you have got assimilated. So this is like this recap exercise which we have taken. This is again part of this concept building exercise. So you have not to think in boxes, in silos, but you have to think holistically, analytically. Okay. Anish, you can ask your query in last half an hour on Zoom. However, you can state on BOS portal. So guys, why again I have to repeat this many number of times? Why this is happening? When I have told you once, you can raise your queries at the end in last half an hour. Yes, Ritika, your queries are visible. Every query is visible to me, so do not worry about that. So first step is understanding and concept building. And second step, which most of students do not pay attention to in CA course, is, and more particularly in theoretical subjects like auditing, like law, is learning. They do not learn the things. They do not remember the things. Okay. So first thing is getting an understanding. Second thing is learning. So learning process, remembering process, you have to again remember the things in your mind. You have to read it again and again, twice, thrice. And third thing is, after learning, when these things get embedded in your mind, then you have to practice. And fourth thing is to write some sample questions, to write some sample answers. Okay. So these are broad 4 steps. So what happens is, we have seen the lecture on Zoom, we have seen previous videos on YouTube, we say we have understood everything. This auditing is a very easy subject. We have understood, we know everything. But remember that you won't be able to write a single line in your auditing paper without learning or without remembering. So what happens is that most of students see videos and they do not remember, they do not learn. So you won't be able to write under examination conditions. Okay, so these steps you have to follow. So I've given you a briefing. Bhumika, again, your queries would be answered in last half an hour on Zoom. So today's chapter is chapter 4, audit evidence. Now you have learnt in chapter 3, students, that auditor performs audit procedures. Okay, so what does he get from performing audit procedures? Tell me what he is supposed to get by performing audit procedures. Yes, audit evidence. Yes, guys, my voice is clear. Yes, Nisarg, am I audible? Hello. Yes, guys, am I audible? Okay. Yes, so you are saying that auditor obtains audit evidence. So by performing audit procedures, auditor obtains audit evidence. Okay. So during auditing, during the course of audit, what the auditor is doing, he is trying to get audit evidence by performing audit procedures. So this is the work of auditor. So majorly he is trying to obtain audit evidence. Okay. So from this very thing, we can understand the meaning of audit evidence or definition of audit evidence. So there is a standard on auditing SA 500 which deals with audit evidence. Okay, so if I were to make a definition, yes, Abdullah, again, you can raise your hand in last half an hour. So if I were to make a definition of audit evidence, what definition I would make? That audit evidence is information used by auditor. It is the information used by auditor in arriving at conclusions on the basis of which opinion is formed. So it is nothing but information which is his opinion is formed. Okay. Hello. Clear, guys? Yes, again, some audio problem is there today. I don't know why it is happening. So, are you clear about the definition of audit evidence? So, this is the definition of audit evidence. As per SA 500. Yes, again, guys, is my voice clear to you? Yes, probably there is some issue in network, I think. Yes, now you are able to hear me, guys. Again, hello. Yes, guys. Am I audible? Am I audible? Yes. So, who is writing this? Amar Yadav, you are saying that to explain the meaning of audit evidence once again. Like Amar, like say you are going for an audit. So you are checking, say, sales invoices. Sales bill file is placed before you. Okay. So you have verified one entry in sales account with the relevant sales invoice. So what is a sales invoice? You have verified some sale invoice number 5, okay, dated so and so. So what is this? This is an audit evidence in support of the accounting entry made in the books of accounts. So audit evidence is the information used by the auditor in arriving at the conclusions on which auditor's opinion is based, because it is on the basis of these audit evidence, this information, that auditor would be arriving at some conclusions, and it is on those conclusions that his final opinion, which would be expressed in audit report, it would be based. Like copy of sales invoice, I have told you, like some bank statement, like some calculation. Okay, it's very simple. Think it, understand it from common sense point of view. But for writing in the exam, you have to remember this definition as per SA 500. Okay, because many a times MCQs or case study based question, they would twist this definition. Okay. And another important thing, that it includes both information contained in accounting records underlying the financial statements and other information. So audit evidence consists of two types of information. Remember, one which is flowing from accounting records. Now, what is the information flowing from accounting records? Like say purchase bills, sales bills, uh, books of accounts in themselves, cash book, ledger, journal, okay, bank statements, contracts with parties on the basis of which entries are being made in books of accounts. These are all examples of accounting records, stock records. Okay, these are all examples of accounting records, information contained in accounting records. And what is other information? Now, other information may come from those areas which are not in nature of accounting record, like you have read about internal control in chapter 3. So the company has got elaborate internal control manuals where the whole internal control procedures for different things are described, say. So this is other information. It is not, the information is not coming directly from the accounting records, okay, or say minutes of the meetings. So this is again other information. Or say when the auditor seeks confirmation from outside parties, then the response that is received from the outside parties, remember, the response which is received from the outside parties, that is also other information. It is not part of the accounting records of the client. It is not part of the accounting records of the company, of the party. It is coming from somewhere else. Okay, so it is not part of the accounting records, although it has to be tallied, it has to be reconciled with the accounting records. Okay. Yes, clear guys. So definition of SA 500, definition of audit evidence as per SA 500 is clear guys. Drop a mail that this point is clear to you. Yes guys. Okay. So this is guys, this is understanding part. At the outset, I told you that one is understanding part. Now something has gone into your minds that this is audit evidence. Now you have to, when you will open your module after the lecture is over, then you have to remember these things again and again, twice, thrice, 4 times. You have to remember these things. Then you will be able to write in your exams. Then you will be able to write your answers. Yes, yes, Tejaswin, you are right. So not always, but in many cases, it may have to be reconciled. Okay. And audit evidence can be, students, of different types. Okay. So it can vary according to its nature and its source. Nature, like it can be visual, it can be oral, it can be documentary. So we'll come to each one of this one by one. And source, it can be internal and it can be external. So we have already understood meaning of audit evidence. Now audit evidence can be of two different types depending upon its nature or depending upon its source. Depending upon its nature, it can be of three types. Number one is visual, number two is oral, number three is documentary. Okay. Now, what could be the example of visual audit evidence? Yes, can you think? Can you imagine, guys? Please imagine. Can you think of some visual audit evidence? Like say, say the auditor is observing some people doing something in the company, in an entity. So what sort of audit evidence it is? It is visual audit evidence. Like say, when auditor is observing how the company staff, how an organization staffs are carrying out physical verification of inventories. So he is observing how they are counting the things, and he is jotting down also. And he is seeing how these people are counting, how these people are keeping their record of counting. He is observing these things. Like, or say if an auditor goes to a bank, to the branch of a bank, and he observes many things. He sees how the employees are performing their work, how the control system is operating, how the entries are being made, whether some person has uh, uh, when he leaves his seat, whether he logs out of his terminal. So he is observing these things. There is nothing in his hand, but he is observing these things. So this is all sort of visual audit evidence. Clear, guys? Visual audit evidence. Yes, based on observation, Pallavi, Bhavna, you are right. And what is oral audit evidence? So auditor has so many questions in his mind. So it may not be possible to get everything in writing. Something, some explanations, something maybe forthcoming from the management, from the employees orally during the course of audit, and these are being say settled on the spot. So if I am confused about something, so I would ask, like you are asking right now on the Zoom, or you would ask after half an hour on Zoom. So you are asking orally, and your queries would also be settled on the spot. So in a similar ways, the auditor seeks explanations. He asks questions from the employees during the course of audit, and it is not natural for the employees to offer their point of view, to offer their explanations to the auditor. So this is also a sort of audit evidence, oral audit evidence. Yes, yes, Prajwal, you are right. Okay. And many inquiries which the auditor makes, these can be oral inquiries also. These can be oral inquiries. It is not necessary that always auditor make written inquiries, although these it is always better to make written inquiries, but it is not the case that oral inquiries have no value. Okay. So inquiries made orally can be are an example of oral evidence, oral audit evidence. Third is documentary. Documentaries, when you have some document, when you have some paper in your hand on which you can rely upon simply, okay, that is a documentary evidence. Clear? Like some calculation, like some copy of account, some printout, some purchase bill, some sales bill, some bank statement, um, copy of passbook, some debit note, some credit note. These are all examples of documentary audit evidence. Okay. And what is, and depending upon its source, audit evidence can be of two types. One is internal audit evidence and one is external. Now, students, good questions can be made on this aspect in exams. How, which type of question can come? Like say, remember always that while understanding whether an a piece of paper, whether an audit evidence is internal audit evidence or external audit evidence, the basic test is you have to see from where it has originated. What is its source? Okay. Like if it has originated from within the organization, from within the company, then it is an example of internal audit evidence. And if it has originated, if its source is outside the company, if its source is outside the audit client, then it is external audit evidence. So that is the basic difference between internal audit evidence and external audit evidence. Now I ask from you a question. You are going for the audit of a company, suppose, and you find purchase bill file there. Purchase bill file is provided to you by the accounts department for verifying purchases. Okay. So tell me the purchase invoice which is placed in purchase bill file of the client, of which you are the auditor, whether it is an example of internal audit evidence or external audit evidence. Yes. Yes, only one response has come, Faisal Khan. What about others? Guys, my voice today is a little bit hoarse due to sore throat, so you have to bear with it. Now, this is a mistake which we are making, despite my telling you so clearly. Almost all of you except one or two, Vaishnavi and Dipali, and probably one more, all of you have answered it wrongly. Because why? Because I have twisted my question in such a way to confuse you. So this is what happens in the exams. Now tell me, students, you are auditing accounts of a company, okay, and the purchase bill file, the entity is purchasing some goods from other parties. Now who would have issued those purchase invoices? Whether the company, whether the auditing company of which you are the auditor, whether it has issued the purchase invoices or somebody else has issued the purchase invoice. Yes, so all of you have, except 2-3, those who I have named. Yes, somebody else, Tejaswin, outsider, Faisal, now you are saying outsider, but you were the first to answer that it is an internal audit evidence. So this is how the paper setter would try to confuse you. So you uh, you would not have to fall in paper setter's trap. All of you fell into this trap because I said that the purchase invoices are placed in the purchase bill file in client's premises. So all of you thought that it is an internal audit evidence, but you forgot the basic difference, that while classifying an audit evidence as internal audit evidence or external audit evidence, the test is from where it has originated. So from where purchase bill has originated? It has originated outside the company. Somebody's sales has become company's purchase, has become your client company's purchase. So it is an example of, yes, Nancy, it is an example of external audit evidence. Okay. So read the statement clearly. ये नहीं, like it should not like be that there is purchase bill written, so tick external audit evidence or internal audit evidence. Read it completely. What the statement, what the para is trying to convey. Most of the students are very poor at reading, and very poor at writing. I have no hesitation in this, in saying this. Okay. So guys, we have to improve this aspect, and I am here to help you, improve these skills. Okay. Yes, Nancy and Prajwal, you are saying in case of sale invoice, it is internal. Yes. If you talk about this company of which you are the auditor, so all the sales invoice would be generated by this company. So this would be internal audit evidence. But for sales invoices issued by this company would become purchases in hands of somebody else. So for those, the same sales invoice which is issued by my company would become purchases in hand of somebody else who would be purchasing it. So for that company, it would be external audit evidence. For this would be internal. Okay. So clear, the point is not about sales and purchase. The point is about the context. The point is about the context. Yes, Tejaswin, payroll, Tejaswin Marwa, payroll, it is a record of the internal record of the employees on the basis of which salaries are being paid. So it is not being originated from outside the entity, from outside the company. So you are right, it is an internal audit evidence. Correct. So clear, guys? Is this point clear, guys? So guys, quickly, we shall also have a look at some examples of audit evidence, so that because you are new to the subject, you have never been to audit some client probably. So I'll show you, like this is an invoice. Now this is a tax invoice issued under GST law. Okay. So this is a sales invoice. So sales invoice pertains to this company. No, Apurva, I had just given you one example, that something which is internal for somebody, it would be external for somebody else. Say, if you can assume, if the auditor is same for both the companies, then the same invoice, the nature would be different for different clients. Okay. Like this is a sales invoice. Now it is a tax invoice issued under GST. This is how basically a sales invoice looks like these days. So like name of the company, address, GST, invoice number, invoice date, date of supply, and all these things, and Bill to party to whom it is billed, where goods are to be gone, ship to party, transporter's name, product description, like what the product is being sold. Like here, some product is there, and how many, what is the unit, quantity, unit, okay, and GST rate, and amount, and thereafter total amount, name of the company, signatures. So like if you say you have taken a sample and you have checked these invoices, say 10-15 of those invoices, and copy of these invoices in your audit file, then it is an audit evidence. So what kind of audit evidence it is? It is an, say if you are auditor of XYZ Private Limited and it is a sales invoice, so you are it is an example of internal audit evidence. Okay, clear? Yes. Is it clear, guys? So you are able to see the invoice. So guys, we are, sometimes you would be thinking that these are so elementary things. Why these are being shown to us? We know everything. But these are being done to give you a better clarity. Okay. Yes, Tambeshwari, you are saying tax invoice, in tax invoice where discount is written. Yes, there is a discount column. Here, this is a discount column, Tambeshwari. So total GST rate is 5%. Okay. And CGST, SGST is there 2.5, 2.5, 2.5. Clear, guys? So now we'll see another thing, another type of audit evidence, like credit note. So credit note issued by the supplier of goods. Say I am auditor of XYZ Private Limited. Okay. And the company XYZ Private Limited has issued a credit note to another party to whom it has sold goods, it has issued, to whom it has supplied goods, it has issued credit note. Why? It may be because the amount has been charged higher or the tax rate has been higher. Okay, or some amount has been returned back, some goods have been returned back. So to address these issues, credit note is issued so that liability of the supplier is reduced. So what type of audit evidence is this credit note? Say you are auditor of XYZ Private Limited and XYZ Private Limited has issued a credit note. Then go to the basics. Which type of audit evidence is it? Is it internal or external? Again, I am repeating it. I am auditor of XYZ Private Limited and XYZ Private Limited has issued a credit note. Then whether it is an internal audit evidence or external audit evidence? Yes. Internal, yes, you are right. And Arup and Faisal, you are writing it wrongly. You have to see the source. I am saying clearly that credit note has been issued by XYZ Private Limited. And I am the auditor of XYZ Private Limited. So the company of whom I am the auditor, it has issued a document. it has generated a document. So as far as this company is concerned, it is an internal audit evidence. Clear to you? Yes, Arup and Faisal, is it clear to you? Everybody else is writing correctly. Because the source is internal. Remember that I am auditing XYZ Private Limited. I am auditor of XYZ Private Limited. Yes, Kasak, I would explain the difference between credit note and debit note. We are shortly coming to debit note also. So I have explained you the conditions where credit note is issued. Now I will also show you debit note and would discuss the condition when debit note is issued. Okay. Like this is a debit note. Again, if XYZ Private Limited has issued a debit note, say XYZ Private Limited has sold some goods and it has say charged tax at the rate of 5%. So the goods have gone from the factory and company has raised the invoice. So later on they come to know, oh, Are Baba, that this was this item had tax rate of 12%. We have issued uh, invoice at the rate of 5%. If caught, then we would have to pay not only the tax but interest and penalty. So they immediately issue debit note because say the tax charged is less. Now they have raised a debit on the company. They have raised a debit on another entity or another company due to short tax charge. So it is reverse of the credit note. Here in credit note, the issuing party is giving credit, whereas in debit note, it is debiting the other party. It wants to recover some amount from the other party which has been short charged upon him. Okay. So again, if I am auditor of XYZ Private Limited and XYZ Private Limited has issued a debit note, then it is an example of internal audit evidence for XYZ, for the auditor of XYZ Private Limited. But say if this debit note was issued by XYZ Private Limited on say A and company, and I am the auditor of A and company. I am auditing the books of accounts of A and company. Then this debit note issued by XYZ Private Limited, as far as auditor of A and company is concerned, it would become example of external audit evidence because it is not issued by A and company. Okay, clear? So it is not this way, boss, ki if you see purchase invoice, it is an internal audit evidence. If you see debit note, you can write it is an external audit evidence. You have to see how the framing is done, what is being asked. Okay. And the basic test is from where it has originated. From where it has originated in relation to the client being audited. Okay, again I am repeating it. So you have to see from the perspective of the company, from the client which is being audited, if that piece of paper, if that document is being generated by that company of which you are the auditor, then it would be an internal audit evidence, and or if it is coming from outside the company, then it would be an example of external audit evidence. Clear, guys? Is that clear? Is the understanding clear, guys? When you would read from your module, things would be more clear to you. For the time being, if you have gained understanding of say 50-60%, even then it is okay. Yes, yes. If debit note Bhavna, if it is issued by the company of which you are the auditor, then it is an internal audit evidence. So you have to see the things, how the lines have been framed, what is being asked. Again, it is not that debit note in itself is an internal audit evidence. No. Okay. Guys, there is a one more word, one more term which you have been hearing probably in chapter 3, and you might have understood its meaning also. That word is, the term is assertions. Do you know its meaning? Assertions. What is meaning of this term? Assertions. Yes, Amar, yes, you are right. Yes, Amar Yadav, you are right. Yes, you have read about this in chapter 3, and there was a passing reference to it in probably in chapter 1 also. But in chapter 3, it occurs at many places. Yes, yes, positive statements. It is not the whole thing. No, Amar Yadav additions. No, no. Sanya, you are nearing. You are near the meaning of assertions. So, guys, now we will discuss this concept of assertions in detail. So, remember, guys, that students reach their CA finals, and I am sorry to say that no, no, assertions do not mean judgment only, Apurva, and they are not clear about assertions or the various types of assertions. They have a very poor, very rudimentary understanding of assertions. Remember, guys, again I am telling you, this concept, this topic of assertions is very important from case study point of view. Many times, out of 5 questions in a case study, 2 or 3 or even more can be based upon assertions. Okay, so you can understand yourself how important this topic is of assertions. So, guys, as you can see, the word assertions, the term assertions is derived from the word to assert. Yes, Santhya, yes, you are right. So, what is asserting when when you say that somebody is asserting something? What does this mean? What is the meaning of assert? What is the literal meaning of assert? What is the dictionary meaning of assert? Yes, Karan, yes, you're right. Showing something strongly. To say something with a strong belief, with a strong conviction. I say that I am asserting this thing, that I have a strong belief in this, that I am asserting this thing. To say something with, with forcefulness, with argument, to assert, to say something which you believe in. So these are assertions. This is the emphasize. Yes, Tejaswin, yes. Sanya emphasizing. Tejaswin is writing agreeing. Yes. All right. Stating is also correct, Dilip. So guys, why I'm telling you? This is not in your, this is not your, not written in your module from where assertion word is derived from. So again, I am telling you these background stories to help you in, in understanding the concepts in a better way. Okay. So when we say to assert means to say something with forcefulness, to say something with a good belief, with a strong belief. Okay. So as far as textbook definition of assertion is concerned, it says that assertions are representations by management. These are representations by management, whether explicit or otherwise. So I am coming, I would explain all the things. Whether explicit or otherwise, used by the auditor to verify potential misstatements. This is the broad essence of assertions. So first thing is that these are representations by management. So assertions belong to management. First of all, remember this thing. Very, very important. Assertions belong to management. Now say in financial statements, sales are reflected of for say 50 crores in financial statements of a company. So what does this mean? So this means that management is saying, management is asserting that sales of 50 crore have in fact taken place. Now this is one form of assertion. So it also denotes many more things, like 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 the sales which have taken place. It means stocks in that respect have moved from the factory. Okay, that is also an assertion. Now whether it is written in the financial statements, it is not expressly stated, so it is implicit. So explicit means which is expressly stated. Okay. explicit means which is expressly stated. And what does otherwise denote? Otherwise means which is not expressly stated, which is implied, which is implicit. Okay. So always remember the basic fundamental that assertions pertain to management. Assertions belong to management. Like if you see balance sheet of an entity, if you see financial statements of entity consisting of balance sheet and profit and loss, then every head, everything is assertion about something. Like let us have a look at this balance sheet. Okay. So this is statement of profit and loss. Now revenue from operations. Now say these figures are in thousands. Okay. So say sale is 18.60 crores. Revenue from operations is 18.60 crores. It means that management is saying that my revenue from operations sales are 18.60 crores. In fact, these transactions have occurred. This is one assertion they are making. So whether they are expressly stating it, it means when they are showing it, it means that sales have occurred, that these transactions have occurred. And what else? That these transactions are accurate, that these have been properly classified, that all sales which have need to have been recorded, these have been recorded. These sales are complete. So many things can be drawn from this. Many inferences can be drawn from this. So all these are different type of assertions. So like from the sales, from this figure, there flow many assertions. Like number one, sales have taken place. Number two, sales are complete. All sales which needed to have been recorded have in fact been recorded. Amounts are accurate. This is again implied assertion. Okay. Then the amounts have been classified in proper heads. This is again an implied assertion. Okay. Clear? Yes. Yes. Vaishnavi, you are saying we can say that assertion are bases at which elements. Yes, you can say so. Like similarly, employee benefit expenses. Now it means that such expenses have indeed occurred. Okay. Or if we can see balance sheet, so there are trade receivables, 6.63 crores trade receivables. So what does this mean? That these trade receivable in fact existed on balance sheet date. That these account balances are not fake. That these existed at the balance sheet date. So by reflecting trade receivables in financial statements, management is stating these things. Management is asserting these things. That is why we call these as assertions. Yes, guys, clear? Basic funda, basic thing about assertions. What assertion, what type of creature I would say assertion is. Have you understood? Yes, guys. Yes. Yes, B. Kiran Kumar, you are saying that assertions are undertakings by management. Yes, not only that these things actually happened, but many more things, many more things. So although we as auditors are concerned with assertions, but assertions are management's baby. The objective of auditor is to test those assertions. What the auditor does during the course of audit, he tests all those assertions. He verifies all those assertions. He would see whether these transactions have actually occurred or not, whether these sales are genuine or fake. He would see the documentary records. He would see GST returns. He would see sales invoices. He would check stock records. Okay. Similarly, in respect of purchases, he would inspect purchase invoices. He would verify purchase invoices. He would be sending confirmation to trade payables from whom the company has purchased the goods. So what he is doing? So what the auditor does all the time during the course of audit, he performs audit procedures to test management's assertions. He performs audit procedures to obtain audit evidence, to test management assertions. So whatever assertions management is making, whether those are correct or not. Yes, Tejaswin, you are right. Tambeshwari, you are writing physically checking and accounting between effect is assertion. No, you are writing about testing of assertion. This is not the meaning of assertion. Testing means checking assertions. So how auditor checks assertions? By performing different procedures. By performing procedures, audit procedures, he obtains audit evidence. Okay. So we once again see the definition of assertions from your module. Yes. So this is the definition of assertion, meaning. This is very important, guys. And in doubtful situations, it would help you in your exams. So remember these 3 lines by heart. So what are assertions? Assertions refer to representations by management. Read each word carefully, patiently. Assertions refer to representations by management, explicit or otherwise. It means whether these are expressly stated or otherwise. Otherwise means these are implied, that are embodied in the financial statements. Embodied means that are present in the financial statements as used by the auditor. So assertions do not belong to auditor. These, again, I have told you, these are management's baby. The auditors only uses these assertions to verify, to consider the types of potential misstatements that may occur. Like one type of assertion is occurrence. Now, whether that transaction has taken place or not. So the auditor is performing audit procedure to see whether the transaction has taken place or not. So if it has not taken place, then he has identified a potential misstatement that that transaction could be a non-genuine transaction. Clear? So again, read this definition once again here right now. We will together read: assertions refer to representations by management, explicit or otherwise, that are embodied in financial statements. This is another part, that are embodied. Embodied means these are present. Now, this is these are the financial statements. Now, assertions are present in these financial statements. These are embodied in these financial statements. Whether they may be expressly, these may be stated or these may be implied. These are present in these financial statements. Okay. And these are used by the auditor. Assertions are used by the auditor to consider different type of potential misstatements. Potential means possible, which may occur, to consider different types of potential misstatements that may occur, which may occur. Clear? Yes. This textbook definition part is clear, students? Tell me. Yes, Tejaswin, you are saying clear. Everybody is saying clear. So like there is an example given in your module also. Like say if cash in hand is reflected in the balance sheet under the head current assets. So what assertions can strike in your mind? Number one, that the firm in fact had cash in hand of rupees 10,000. Physically, the cash in hand was there in the balance sheet. Yes, Nitin, we'll have a break. Have a little patience, guys. You are in the professional course, so have patience to sit for 1-2 hours. I am speaking in a uninterrupted manner. So you should also have some patience. Okay. I understand we'll have break after some time. Okay. The cash was free and available for expenditure to the firm. That cash, what does cash in hand denote? It denotes that cash was available to the firm, and that books of accounts also show a similar balance. It was not only physically present, but in the form of currency, but books of accounts also show a balance. So these are all thing implied, implicit, that the cash was free and available. Now it is nowhere written, it is implicit. Okay. Like another thing is given, like say there is a plant and machinery of 2 lakh. Depreciation till the end of previous year is 70,000. Depreciation for the year is 13,000. Total depreciation is 83,000. Net block is 1,17,000. So what are the assertions? What are the assertions? That the firm owns the plant and machinery. Now, is it written somewhere in the balance sheet that the firm owns, that the company owns the plant and machinery? So if I see this balance sheet, property, plant and equipment, the net block is appearing. Even if I go to notes of accounts, whether it would be written there that this is owned by the company. it is understood, it is implicit that if it is coming in the financial statements, then bills must have been in the name of the company. Bills of plant and machinery must have been in the names of the company, and the company must have owned it. Okay. And that the historical cost of plant and machinery is 2 lakh. Okay, this is written. This is expressly stated. Historical cost of plant and machinery is 2 lakh. That plant and machinery physically exists. Now, whether it is written somewhere in the financial statement, only balance is reflected. It is not written that this exists. It is understood that if plant and machinery is there, it means that physically plant and machinery is there. If building is appearing in financial statements, then it means that building is physically there. So this is again a sort of implicit assertion. The asset is being utilized in the business of the company productively. So obviously the machinery is being used on which you are claiming depreciation. It means that it is being used. So again, this is an implicit assertion. So on. Okay. So some assertions are implicit, some are explicit. But remember again, most of the assertions are implicit. Most of the assertions are implicit. They are not expressly stated. So only in balance sheet it would be written building, plant and machinery. It won't be written there. Only balance figure would be written. It won't be written that company owns it, the entity owns it. It is understood. It is implied. Okay. Yes, should be, should be. Yes, Ritika. Generally, it should be. Like say if a company is showing uh, fixed deposits with banks under the head, say current investments. Okay. So it means that those fixed deposits with bank in fact existed as at that date. And these were not fake. These existed. Okay. And assertions are also negative as well as positive. Negative means when it is expressly stated that these things do not exist. Like if you state that there is no contingent liability, then it means that it is a negative assertion. Or if say if you have taken loan from a bank and under secured loans head it is written that the loan has been taken from so and so bank, repayable in so many installments, guaranteed by this and this. So it is again a explicit assertion. Okay, clear guys? So before we come to the types of assertion, we will have a short break of 5-7 minutes. So guys, see you after 5-7 minutes. Have a short break of 5-7 minutes. Yes, Nisar, break of 5-7 minutes. Break starts. Yes, Nisarg. Yes. Welcome back, guys. So, Tambeshwari, you are asking me to explain explicit and implicit assertion again. So, explicit, as the name suggests, explicit means which is expressly stated. Okay. Like here, this example is given secured loans, rupees 4 lakh. If below secured loans, it is hello. Yes, is my voice clear, guys? So if below secure, yes, now is it clear, guys? Okay. So if it is written below secure loans, that who is the lender, what is the security provided, and how the loan is repayable, repayment terms. So all these things, that then it would be example of explicit assertion, which is expressly stated. Okay. Otherwise, nothing would be, everything would have to be inferred. Everything would have. Yes, is it clear to you, Tambeshwari and Tejaswin? You are stating, is there any positive assertion as well? Please explain. So the, like, say plant and machinery is appearing in financial statements, or sales are appearing in profit and loss account. These are all examples of uh, positive assertions. There is nothing negative in it. These are examples of positive assertions. Yes, Tejaswin, you are saying by explicit explicit means which is stated clearly, and implicit means which is not stated clearly. Like, say in this example of plant and machinery, there is nowhere written that plant and machinery physically exists. So it is implicit that the balance of plant and machinery is appearing. It means that plant and machinery physically exists. So this is implicit, this is implied, this is derived from this balance. Okay. And explicit is that the cost of machinery is so much, that so much depreciation has been charged. It is explicit. It is expressly stated. It is expressly stated by way of figures. Yes. Dropping again and again. Hello. Yes. Now it is audible, guys. So now we come to types of assertions. Students, types of assertions. Nisarg, hello Nisarg, are you able to hear me? यार निसर्ग आवाज ड्रॉप कर रही है। आप आप देखिए आपके एंड पे कोई प्रॉब्लम तो नहीं है। आप आप लाइन पे रहिए, आप देखिए क्या दिक्कत है। अभी आधा पौना घंटा रह गया, आप थोड़ा टच में रहिए। यस। सो गाइज विल कम टू यस। आ रही है आवाज? बीच में ड्रॉप कर रही है। आप देखिए आपके एंड पे क्या इशू है, इसको रिजॉल्व करिए अभी तो। आप आ रही है? हाँ, बीच में ड्रॉप कर रही है। ओके, देखते हैं, शायद इसको अपग्रेड करना पड़ेगा उसको। टाइम लग जाएगा, अगर मैं जूम को अब अपग्रेड करूंगा तो उसमें टाइम लगेगा। ओके। So types of assertions. So in chapter 3, students, you have read about three things. So when you are auditing, there can be three things. Number one, classes of transactions and events. There can be account balances. And there can be presentation and disclosure in financial statements. So financial statements basically relate to these three things. It can be transactions, it can be account balances, and presentation and disclosure. There is no fourth thing. So transactions are those you can understand which are reflected in profit and loss, like sales, like purchase, like administrative expenses, like employee benefit expenses, like power and fuel. These are all transactions which have occurred during the course of the year. And account balances are those which are reflected in the balance sheet part, like say trade payables, like say trade receivables, like say inventories, investments. equities, reserve and surpluses. Okay. Property, plant and equipment. These are all account balances. And there are presentation and disclosures. There are disclosures in the balance sheet, in the financial statements. So we check different assertions under all pertaining to all these things. So what are these types of assertions? For class of transaction and events, there are 5 types of assertions. Okay. One is occurrence, second is completeness, third is accuracy, cutoff and classification. And now we will understand the meaning of all different types of assertions. So occurrence. What does occurrence mean? Occurrence means that transaction has in fact occurred and it belongs to the entity, it belongs to the company, it belongs to the organization. Yes, Tejaswin, you are saying classes of transaction means you can correlate it with the profit and loss, because profit and loss is the summary of what all transactions have happened during the year. Okay, like purchases have happened, like sales have occurred, like different expenses have been incurred during the course of year. These are all different classes of transactions. These may be expenditure transactions, these may be income transactions. This is the meaning of this. Transaction and events here, it is both synonymous. Okay. So occurrence assertion means that that particular transaction or event has in meaning of occurrence is clear to you. Say like sales in the profit and loss are shown for say 10 crores. Then you are testing the assertion, you are testing the management's assertion that sales of rupees 10 crore have in fact taken place. That these sales are not fake, that actually these transactions have occurred. This is the meaning of occurrence. And these have in fact been made by the company. The sales belong to the company. It is not that somebody's else sales have been booked by the company as revenue. Clear? Meaning of occurrence is clear, guys? Yes, meaning of occurrence is clear. Now completeness. What does completeness mean? Completeness means that in respect of the transactions which have been recorded, basically nothing is left out. All which needed to have been recorded have in fact been recorded. Like say if I take the example of sales, then all sales which were required to be recorded in the books of accounts, in the financial statements, these have in fact been recorded. Sales are complete. Okay, clear, guys? Now you have to remember all the names Yes, recorded in full, Ritika. You are saying it is correct. And what is accuracy? Accuracy means, yes, I think now it is audible, guys. So otherwise, I would remove this headphone as you are suggesting. Many of you are suggesting. We'll try it. So I'll finish this topic. So accuracy, what does accuracy means? Accuracy means that that sale, like if you take the example of sales, that sales have been recorded accurately. Whatever amount was there in the sales bills, say that has been correctly recorded in the books of accounts and consequently in the financial statements. Okay. So this is one assertion. Another assertion is cut off. Cut off means that these have been recorded in correct period. Like say, sales of next year have not been recorded in this year. Cut off means break. So like cut off period is 31st March. So these the sales, I am taking all the example from sales to help you understand better. So these are recorded in correct period. Okay. Classification. Classification means that these are properly recorded in proper head of account. Like sales have been rightly booked under sales. Say employee benefit expenses have been rightly booked under that head. What an auditor does during the course of audit? He is basically testing these assertions in respect of transactions which have occurred during the year. Like say in case of sales, he would be testing whether sales have occurred, whether sales are complete, whether sales have been correctly recorded in cut-off period, whether the amounts recorded are accurate, whether these have been correctly classified. So all these things he would be testing. So for transactions, for profit and loss items, you can say broadly, these nomenclatures have been given for different type of assertions. Yes, accuracy, Sanatan Biswas, you are asking what is accuracy? Accuracy means amounts and other data relating to the recorded transactions have been recorded appropriately. Say there is some sales invoice of rupees 5,000. So it has not been recorded in books of accounts as 50,000. So what has been recorded is accurate. Yes, is it clear? Accurate amount has been recorded. And similarly, in respect of account balances, now these are balance sheet items. These are P&L items. In respect of balance sheet items, account balances, there are 4 types of assertions. There are 4 types of assertions. 。  . 。  . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . Now, one assertion is existence. So, guys, understand the difference. When we, in respect of transactions, we say that transaction has occurred, but in respect of account, yes, Bhavna, yes, right. So here you have to understand the difference that in respect of account balances, we use the term existence, whereas in respect of transactions, we use the term occurrence. So when I say that I am testing uh, a trade receivable, so I am testing existence of a trade receivable. I am not testing occurrence of a trade receivable. Meaning of both is same. Yes, again, yes, voice is there. Yes, Nisarg. So in respect of transactions, again, students, I am saying in respect of transactions, we use the term occurrence, and in respect of account balances, we use the term existence. So that should be clear to you. So in respect of like trade payables, trade receivables, property, plant and equipment, we would say whether these balances existed. Okay. And second, in case of rights and second assertion in case of account balances is rights and obligations. So what is meaning of rights and obligations? So when obviously when you are having certain assets, then you would be having rights associated with them, and when you would be having liabilities, you would have certain obligations associated with them. Like say if I am having trade receivables in my balance sheet, so it means I have right to recover money from those trade receivables. I have a right to recover money, to receive money from those trade debtors. Whereas in respect of trade payables, I have an obligation to pay money to those creditors, to those payables. Yes, Ritika, you are perfectly right. Transactions have occurred and rights and liabilities exist. This is the difference. This is the final difference which you have to remember in your examinations also. That existence assertion always pertain to balances. You are perfectly right. Okay. So rights and obligations is also clear. Now, third is completeness. Completeness means that all the account balances are complete. Whatever should have been recorded have been recorded. It is there in all uh, three type of heads for transactions, for account balances, for presentation and disclosure. Because why? Reason for it is Sanatan, because all all these things should be complete, nothing should be left out. That is why this assertion completeness is common in all the three categories, in the classes of transactions, in the account balances, in the presentation and disclosure also. Okay. And fourth is valuation and allocation. Fourth is valuation and allocation. Now, what is valuation and allocation? Valuation means that account balances have been properly valued. Now, like take the example of debtors, take the example of trade receivables. Now, say if I am not able to recover the balance of trade receivables, say for 3 years from a trade debtor, and I have been corresponding with him for the last 3 years, then and the amount is stated at the same amount at which it was recorded when the transaction was made, and say there are chances that I will not be able to fully recover the money because of solvency problem with other party. So is my valuation proper? Is valuation of my trade receivable proper? I should have made provision. Then only valuation would be proper. So that is the meaning of valuation. That is the meaning of valuation, that all the account balances should be properly valued. And allocation means like allocating cost, like when you when say valuing inventories, you allocate different elements of cost while valuing work in progress. Okay, so this is the meaning of allocation. Clear, guys? These two types of assertions are clear to you. So the things are same, but the nomenclature is different. Yes, Vaishnavi, you are right. And you have to remember these names by heart. You have to learn what do these names, these terms stand for, what are different type of assertion, and whether you would have to see whether it relates to transaction or whether it relates to account balances. Okay. And similarly, in case of presentation and disclosure, there is one assertion relating to occurrence and rights and obligation. It is combination of this one and this one. Okay, so whatever the management is disclosing, it is presenting, it has in fact occurred, that event has in fact occurred, and if it is in the nature of some asset, then rights are flowing from it, and if it is in the nature of liability, then there is a corresponding obligation to it. Okay, and completeness is common. It has got the same meaning. So whatever is being disclosed, it is complete in all respect, and nothing has been left out. Okay, and next is classification and understandability. So properly classified, and it should be understandable. So whatever disclosure management is making, these should be understandable to the users of financial statements. Okay. Accuracy. So whatever disclosures are being made, whatever information is being presented, it is accurate and properly valued. So sometimes, like say, the management is making disclosure of contingent liabilities. So contingent liabilities should be accurate and it should be properly valued. Whatever value should be stated for contingent liabilities, it is stated. So these are different types of assertion, guys. So you can prepare your own acronyms for remembering. Like you can remember these by preparing an acronym like this: OCACC. From examination point of view, Yes, this material is for exams. This is right from your module, Sanatan. This is right from your module. Questions are being asked on these topics in exams. So like you can remember this as OCACC, occurrence, completeness, accuracy, cutoff classification. So like you can prepare your own acronyms as you may like. Yes, students, is that clear? So we have understood the meaning of assertions. Yes, Ritika, we'll come to that when we will be doing some questions. When we will be doing some MCQs, you will come to know about this. Yes, yes, any sort of acronym you can prepare. Yes, Tejaswin, you are saying, please tell completeness of account balances. Like say property, plant and equipments. So all assets which need to have been recorded under property, plant and equipment, in fact these have been recorded. So this is the example of completeness assertion in respect of property, plant and equipment, that all things which needed to be capitalized in the books of accounts, these have been in fact been capitalized, and these have been reflected under uh, the property, plant and equipment. Yes, invoice and bill, Bhavna, both these terms are used interchangeably. Okay. So guys, you have read about audit procedures in chapter 3. So what is the purpose of audit procedures? Tell me. What is the purpose of audit procedures? If I asked to you simply, what is the purpose of audit procedures? What would be your answer? What is the purpose of audit procedures? Sorry. Yes, anyone? Yes, yes. Amit, you are right. To obtain audit evidence. Sanatan, for detecting an opinion, this comes later on. First of all, by see the sequence, understand the sequence first. Auditor performs audit procedures to obtain audit evidence. And it is on the basis of audit evidence that auditor draws conclusions. So he has obtained audit evidence, but it has to be evaluated. He would evaluate that audit evidence. And after evaluating it, he would assess. Evaluation means to assess something. And after assessing it, he would be drawing conclusions. And after he draws conclusions, he would be forming opinion, which would be finally expressed in audit report. Clear? So this is the sequence, guys. Never forget this. Never, never, ever forget this. That audit procedures are ways to obtain audit evidence, and it is on the basis of audit evidence that auditor draws conclusion, and on the basis of conclusions he forms his opinion, which is expressed in audit report. Is this sequence clear to you? Now, what are different types of audit procedures, students? You have read one kind of audit procedures in chapter 3. One are risk assessment procedures. You have read about risk assessment procedures in chapter 3. And there are further audit procedures apart from risk assessment procedures. So yes, can anybody tell me what is the meaning of risk assessment procedures? Yes, Ritika, tell me. What is the meaning of, or what is the objective of risk assessment procedures? Just one line. What is the basic objective of risk assessment procedure? Yes, anyone? You have completely gone through chapter 3. What is the basic objective, basic purpose of risk assessment procedures? No, no, testing of controls, no. I am asking from you, what is the objective purpose? What is the purpose of risk assessment procedures? The purpose is, as the name suggests, to detect the risk of material misstatement. What are the what is the possibility of material misstatement happening during the course of audit? This is the basic objective of risk assessment procedures. No, no, not to find material misstatement. Material misstatements are found by other procedures. That is the difference, Tejaswin. Risk assessment procedures just assess the possibility of misstatements in financial statements. They just assess the probability of misstatement occurring or happening in the financial statements. They do not themselves find out misstatements. Although in combination with other procedures, they can be used to find out material misstatements, but their basic purpose is to identify and assess risk of material misstatement. Yes, whether due to fraud or error, this much you know. And what are further audit procedures? Further audit procedures are tests of controls. This you already know, testing controls, so that controls are operate satisfactorily. They are able to detect or prevent material misstatements. and substantive procedures. Now, these are substantive procedures. These procedures, substantive procedures, these procedures detect material misstatement at assertion level. At which level? At assertion level. Like you are checking the sales. Okay. So it is an assertion level. You are checking assertions pertaining to sales. So you find some bill which is say wrongly entered in the sales account. Okay. So you have detected a misstatement at that stage. So which kind of procedure it is? You have actually found a misstatement. So which kind of procedure it is? Yes, anyone? Yes, anybody? Tejaswin, yes, substantive. Right, Tejaswin. Good. It is a substantive procedure because by definition, substantive procedures are those procedures which are meant to detect material misstatements at assertion level. Okay. And say if I was going through financial statement of the company for past years, and I saw that during the year under audit, sales have increased considerably, more than 100%. Say last year's, these were say X, now these have become 2X. Okay. So I have a feeling that there could be misstatement in it, that the sales could be materially overstated. So what I am talking about is, I am talking about of possibility of overstatement in sales. So what I have performed is, I have I have gone through balance sheets of the company for past years, and I have inspected the balance sheets of past years, and I have performed risk assessment procedures. I have used inspection as a risk assessment procedures, but I have not actually found out misstatement. When I would be finding out misstatements only by performing substantive procedures. Okay. Clear, students? Is that clear? So substantive procedures are again divided into two parts. These are tests of details and analytical procedures. So we would be reading about it later on. For the time being, you can understand this much. Tests of details can relate to transactions or account balances. Okay, these may pertain to um, checking profit and loss items, verifying profit and loss items, and these may pertain to verifying account balances, verifying trade receivables, verifying property, plant and equipment, verifying trade payables. So on the basis of that, these can be again broken into tests of transactions and tests of balances. So this broad picture, students, you have to remember, you have to keep in mind. Yes, test of control is different from substantive procedures. Yes, Srinivasan, test of control is different from substantive procedures. These procedure tests of details and analytical procedures, these are part of substantive procedures. Tests of controls are separate. So we will again repeat this in our next lecture. So for the time being, students, you can ask something. So Nisarg, if you want to ask something on Zoom, you can ask. Yes, Nisarg. Nisarg, are you able to hear me? हाँ, unmute कर दो. Yes, कोई, if any students wants to ask something.
Hello, sir. Good evening,
Yes,
sir.
yes. Good evening.
Sir,
Yes.
test of detail is divided into.
Tell your name. Who is speaking?
Sir, Srinivasan.
Yes, Srinivasan. Yes, yes.
Yeah. So, sir, substantial procedure is divided into test of details, right, sir?
Yes. Substantial procedure is divided into tests of details and analytical procedures.
Okay. So it's again divided into test of transactions and balances, right, sir?
Yes, tests of detail is again divided into tests of transactions and tests of balances.
So is this linked to that account balances and class of transactions?
Yes, yes. These are linked to that. Tests of transaction means checking P&L items, and tests of balances means verifying balance sheet items. That is right understanding.
Yeah, sure. Thank you, sir.
Okay.
Yeah.
Anybody else?
Hello, sir.
Yes, Hardik Marwa, yes.
Sir, I want to ask that, is there any other example for substantive procedures, if you can provide?
Yes, yes. There can be many examples, like say if you send, if an auditor is sending external confirmation to a trade receivable to a trade debtor. Okay. So I as an auditor, I want to confirm the balance of trade debtor. So I am sending a letter to him. So it is an example of substantive procedure, because by getting their response, I would be knowing whether there would be a misstatement or not. Clear, Hardik?
Yes, sir.
Yes. Yes, Jinky Mishra, you are stating paper pattern of audit. We'll be coming to it later on in other lectures. Yes, Shahid.
Good evening, sir.
Yes, good evening, Shahid.
Sir, I want to ask that for making audit evidence, there are two bases: nature basis, and source basis.
Yes,
Can
yes.
two of them be included in cup of audit evidence? Like nature also and source also.
Yeah, repeat your question. These are not straight. Try to understand, Shahid, that these are not watertight classifications. Like external evidence can be documentary also. Internal evidence can be documentary also. Like for example, you take sales invoice of the company which you are an auditor. So it is an example of internal audit evidence, but it is also documentary in nature.
Yes, sir. Understand.
Clear?
Thank you. Yes.
Yes.
Thank you, sir.
Okay.
Sir,
Yes. Yes.
my name is Tambishwari.
Yes,
Sir,
Tambeshwari. Yes, yes.
sir, negative assertions. I don't understand why is.
Negative assertion, Tambeshwari, means when it is clearly stated, but that this assertion does not exist. Like say if a company clearly states in the footnotes that there is no contingent liability. Okay, so it means that it is a negative assertion. That a company is stating, that company is asserting that there is no such liability. Okay.
It means, sir, sale is supposed to like an accounting balance return 180 lakh, 180. It's type.
What you are trying to say is not clear, Tambeshwari. It's better you frame your query and on the mail.
सर मेरे कहने का मतलब है कि
हाँ, आप हिंदी में पूछ लीजिए. हाँ, कोई बात नहीं, मैं हिंदी में जवाब दे दूंगा. हाँ हाँ,
यस, हमारी सेल 2 लाख की है मानना, और
ठीक है.
बुक और अकाउंट में हमने लिख दिया 1,80,000, मतलब कि 1,80,000.
तो वो
तो
तो
सर
मिस स्टेटमेंट हो गई ना. वो तो मिस स्टेटमेंट हो गई ना. आप सेल 2 लाख है और बुक्स ऑफ अकाउंट्स में 1,80,000 है, तो वो इसका मतलब मैनेजमेंट तो असर्ट कर रही है 1,80,000 है, लेकिन ऑडिटर ने ढूंढा है 2 लाख है, 2 लाख है, तो वो तो 20,000 की मिस स्टेटमेंट हो गई ना.
तो सर आपने कहा वो, सर आप हिंदी में बता सकते हैं नेगेटिव असेसमेंट?
नेगेटिव असर्शन और पॉजिटिव असर्शन का ये मतलब है जब कुछ ऐसा इसको मिस स्टेटमेंट से कोरिलेट नहीं करना था अम्बेश्वरी आपने. इसका ये मतलब है जब ये लिखा हो कि ये चीज नहीं है, जैसे कंपनी की कोई बिल्डिंग नहीं है, क्लियरली लिखा है ना, तो वो बिल्डिंग फाइनेंशियल स्टेटमेंट्स में आ रही है और नोट्स में भी लिखा है कि बिल्डिंग नहीं है, तो ये एक नेगेटिव असर्शन है. इसको मिस स्टेटमेंट से आपने कोरिलेट नहीं करना, आप गलत कोरिलेट कर रहे हो. ठीक है.
यस सर. ओके
ठीक है.
सर.
यस हार्दिक.
Sir, can we say that if a company is having negative assertion, this means that, for example, you are saying that there is no contingent liability with the company. This means that if the company declares that it does not have contingent liability, it is negative for the outsiders who have given them credit.
Yes.
And positive means that if we have an asset and we have taken a secured loan, then it is a positive for the outsider that their loan is secure to the extent of the asset.
Yes, and positive, and company is stating it whether in express manner or implied manner. Okay.
Okay, sir. And sir, one last doubt. Can I say that explicit explicit assertion means that which by default needs an explanation?
Which by default needs an explanation. Which by default needs an explanation. No, explicit means which is clearly stated. You understand it this way. Explicit means which is clearly stated, and
Sir.
implicit means which is not clearly stated, which has to be inferred, which has to be derived from it.
Okay, sir.
Clear?
Okay. Okay, sir.
Yes, Ritika.
Good evening, sir. Am I audible?
Yes, clearly.
Sir, I understood that negative assertion is negative sentence, like not is used, so like that. Is it
Yes,
true?
yes. You can understand it that way.
Okay, sir.
Yes. Anybody else? And students, one more thing, always remember that most of the assertions in financial statements are implied assertions. This is very important. Always remember. When I had given you example of sales, like, so we have read many assertions about transactions, like occurrence, like accuracy, like classification, like completeness. Now completeness or accuracy, these are not expressly stated. These are always implied that whatever is stated is accurate. That management is saying that my sales are accurate. That management is saying that my sales are complete. Clear? Yes, is this clear, guys? Yes, any other
Sir,
query? Yes, yes.
sir, can you one time again explain substantive procedure?
I'll substantive procedure. This topic is still not complete. I will be coming to it again in next lecture on Tuesday.
Okay, sir.
Okay. So today I have just given you an overview. Do not worry.
Okay, sir.
Do not worry. I will make you understand all these concepts. Whether you are able to learn or not, this is a different matter. But I will definitely try my best to make you understand. Now, learning part is your students. Yes, guys, is that clear? Anybody else? Okay, so with this, guys, yes, Karan Kumar.
And we say that positive assertion for a one person may be the negative assertion for another person.
Positive assertion for one may be negative for another. No, unlikely. It should not be the case.
Like
You
like
do not
house on rent.
you do not correlate it with internal and external. You are probably trying to correlate it with internal audit evidence and external audit evidence. You do not do it that way. Okay. Okay, guys. So we'll see you again on coming Tuesday, and all the very best for learning and for reading. Try to read the chapter. Try to once go through it. So complete 1 month, guys. During the month of October, we are going to do this chapter number 4, audit evidence. Okay. So thank you, guys. Thank you, everybody, for bearing with me despite some technical glitches, for hearing patiently, and for responding in a great manner. So thanks, guys. Thank you.
Thank you, sir, for study better.
Okay.